Hey everybody, this is Blake with 10 Talents Trading. I'm also known as Forex Money Flipper. I'm not wearing my hat today, but my hat has a dolphin on it. This is the Miami Dolphins hat. That's the football team, in case you didn't know. Anyways, I have this on the board from the last video. I thought if you didn't see the last video, maybe you would want to see that. I'm not going to talk about it, or I wasn't planning on talking about it. But you can screenshot this and study it and all that. But this is not the topic of the video today. So we're going to make a new video today, okay? Because I already made a video about this. All right. So we're going to start over. Even though I like this and I could do another video on it, I already did a video on it. So I'm not going to be a lame-o, same-o, and all that. You see what I'm saying? I'm going to keep it fresh, keep it fresh. You know what I mean? Keep it fresh, keep it fresh. Alright? But yeah, discipline, emotional intelligence, money management, commitment. You know what I'm saying? Discipline to learn, prep, chart, plan, patience, focus, emotional intelligence, not having FOMO, fear of missing out, detach from results, and don't revenge trade. You know what I'm saying? Focus, right? And then, yeah, money management, preserve precious capital, PPC. You down with PPC? Yeah, you know me. And risk management. Okay. High probability trades. All right. Commitment. Keep calm and continue trading. Practice makes perfect. So there you go. Now we're going to make a new video here. You know, I put a lot of effort into this. And one of these days, whenever I am successful in driving a Lamborghini, people are going to wonder, how do you do it? And I'm already going to have all these videos made. And so I can just say, you want to know how I did it? Then go to my YouTube channel. Watch all the videos I made before I made my millions. And then that'll be that. So, yeah, what are we talking about today? Well, I don't really know. But I've got this marker and I've got this whiteboard and I'm going to figure it out as I go. Because this is how I do it. Because I know enough to know to make a video. And when the title you see it, you'll know what it's about. But this video basically, you know, we're just going to talk about whatever I want to talk about. So what I want to talk about is basically, you know, how are you going to act, right? How you going to act, right? So we're going to do that. How you gonna act, right? How you gonna act? Okay. What do I mean? What I mean, okay, when you get on the charts and you see the market is taking off, okay, are you going to impulsively buy or sell that market? Or are you going to sit back and wait on a good trade? Okay, so number one, how you going to act? Okay, so what we need to do, let's just talk about what we need to do, not what we don't need to do. What we need to do is wait. Okay, wait. Watch. Okay. You can anticipate, but we need to always base our decisions on what we see and not what we think is going to happen. Okay? So we need big facts. Big facts. Okay? We need big facts, right? And so what that means is we're going to trade based on, just like I said, I'm going to repeat myself, we're looking for evidence on the chart. Okay, that's another way to say it. We're looking at what's going on. Okay, not what do I think. Okay, I'm not Nostradamus. I don't know if Nostradamus was a rich Forex trader, but you know, I think people who try to predict the markets are really in trouble for different reasons. And one of the reasons is pride and ego, and thinking that you're right, or wanting to be right, or wanting to be proven right. So when you say, well, I think the market's going to go whatever, down, up, and then if it doesn't do that, you know, you're thinking, man, but I still think I'm right. I know what I'm talking about, whatever. You know, and it's just like that thing inside where it just is like, oh man, I think this is what's going to happen. Instead of being like, dude, bro, I'm bleeding money, like, this is not good. And, okay, so what is the chart telling you? You got to step back. You got to step back, man. See what I'm saying? Because sometimes when you're in a trade, you can be like, you can just be like having tunnel vision. You can be having these blinders on, and you're on the 5 minute. Maybe you're checking the different time frames even, okay? But you probably heard it said before, what would I do if I wasn't already in a trade? And, you know, the thing about it is you just have to cut losses quick and let your winners run. So I recently sort of had a shift in thinking in terms of just allowing the market to run, right? When I'm in a trade, allowing the market to do what it's going to do, because I've run into problems before where I took profits too soon, even if it was at a key level or a you know, even an order block. You know, sometimes it'll just bust right through there. I've also made the mistake of, like, let's say you get in a position, if you're thinking the market's going to go up, you buy here. No. It goes up here, you buy here, and then it goes back down, you buy here. And there's a key level there, maybe, you know. But anyway, so then you get out of this position as soon as price moves up, but then it shoots up, right? So sometimes what I'm saying is, to avoid that, you have to kind of, you know, either two things. Either just accept that. See, because it went up. It's like this. So price went up, back down. Where's my eraser? But Blake, you're so unorganized. You're so unprofessional. You just start recording and you're not even ready for the video, and you don't care. That's not true. I do care. So anyway, there we go. So say the market went up like that. Okay. So what I'm saying is, if you buy here and you buy here, but then you set your take profit right here for this, and that one goes up, but you got out of this one, right? But then the market just goes up and it blows right through this, so you're only in this position and not in that position, right? Whereas if you stayed in this position, then you'd have more money, but you didn't. So I guess the topic of the video is looking for evidence on the charts of what's going on, what may happen in the future. But the big thing that I want to focus on also is number two. And I don't want it's going to be yet, but I know that I want to talk about it. I kind of know what it's going to be. I don't know what I'm going to call it. But so you have the evidence on the chart. Okay. Now here's the thing. So you need to be having order blocks marked on the chart, and also your key levels, and also your trend lines, and all this other kinds of stuff like that. All right. But you need to be waiting for it to have a plan. The Bible says, without a vision, the people perish. So you need to have a vision of what you're looking that may happen. And then you need to wait on that. So what I'm trying to say is reduce the number of trades while increasing the quality, right? Okay. So these two go together, right? You've got OBs, trend lines, you know, key levels, and then, you know, you're not over trading, right? You're just waiting on the spots. You're waiting on the spots, right? So you're waiting on the good trades. And you know what, guys? I kind of want to just keep it real simple today. I just want to say, watch, wait, look for the facts, right? Also evidence, same thing. Okay. Evidence. Order blocks, trend lines, key levels, patterns, right? So you got patterns, candlesticks, okay. And then reduce the number of trades while increasing the quality. And basically, I'll do one more thing, which should be number 1, but it's number 3. Or we could do, you just make it number 1. So it would be like 1, 2, 3, I guess. But anyways, and that is, what was I saying? Watch and wait, reduce the number of trades, and mindset, right? So you have to observe, and control your mind, right? Also, you could say you got to master your mind, right? Also, you could say mind control, right? So you need to observe and control your mind. You need to master your mind, right? And then you know, so yeah, and then mind control your mind. So how you going to act is basically just to say, when the market is doing this, right? Oh, it's going up. Oh, it's going up. Oh, I need to buy. I need to buy. Oh, let me buy. need to back up off that. Okay, go take a walk, do something, stand up. Right, you got to get out of that. No, 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 no. Hell no. Okay, that's for suckers. That is a fool's game. All right. So what you gotta do is you gotta just chill and wait and watch. And you will not be a successful trader long term if you're itchy on the trigger finger to buy or sell. Period. You've got to reduce the number of trades. We've also this is called self-regulation. Self-regulation, okay? So I'm gonna put this in green because this is gonna be where you make your money. Alright? And I don't have a place to write it, but I'm gonna make a place. Okay? Self regulation. Okay, what does that mean? Well, it means if I lose if I'm trading a $100 account and I lose $10 in one day, I'm done for the day. There's no negotiating. We don't negotiate with terrorists. Okay, and FOMO is a terrorist. You know, fear of missing out is a terror to the person suffering from FOMO. Okay. So we don't negotiate with ourselves. We don't negotiate with stupidity, okay, and the fact that we have to have rules, all right. And so you need to have a point where if you lose X amount of dollars in one day, that you're done for the day. That's your punishment. That is your you know. So basically. What can you do, right? Besides continue to lose money, right? So what does that mean? You need to go and watch a YouTube video or read a book or meditate or I don't know, do something, anything besides be an idiot and you know try to make your money back when you're just obviously you're losing. And you know, it's a downward spiral sometimes or all the time if you're, you know, if you lose one trade and then you jump into another losing trade, right? So in other words, if you think the market is going up and you buy, right, and then you start losing money and it's going down and so you're like, okay, well, and then you finally gets to a point, let's say it's looking like a buy, right, and you buy somewhere and then it starts to go down. Well, it gets to that point of pain where you're like, okay, I'm going to get out, but I want to make money, so now I'm going to sell. And then typically that's when it goes up. Why is that? Because you did not watch and wait, or wait and watch, okay? And you did not reduce the number of trades. You increased the number of trades, right? So here's a piece of advice for myself. When you get out of a losing trade, there needs to be like a refractory period where you don't take another trade right away. I don't care if the market moves down 1,000,000 points. If you're thinking about selling and you miss out, and you see the market has been moving since before most of us were born, and it will, you know, unless the end of the world comes and happens and that. You know, but you know, or the one world currency comes that talks about in the Bible. Unless something like that happens, then the markets will keep moving long after we're gone, right? So we're here, and we don't want to lose money, right? So going into the day knowing that, okay, well, here's my wad, and if I lose it, you know, this wad of cash, it's hypothetical, theoretical, not really, because it's really real money, right? So, you know, you can't just say, well, it's just numbers, it's just not real, it's just Bitcoin, it's just, you know, sometimes I think we get too detached from money, and we have to come into the market knowing that, okay, I've got this $10 for the day. If I lose it, that's it, I'm done. And hold yourself to that. That's your punishment. Now it's time to go and read and learn and review take the time that's left over for the day and go back and review something that I don't do, something that I'm really bad, really guilty of. And one of the reasons is I take too many trades, and it's really hard for me to analyze what I did wrong because I'm in and out, in and out, in and out. There's a reason that I'm a losing trader currently. And all of these videos, the real true goal of these videos is to help myself. And hopefully the videos are good and true and right, and they help me to become a multi-million-dollar trader. And then, so therefore, if they were able to help me, then they can help you, right? So, and I can validate that in the future, God willing, that I should live many more days, many more years, decades. But yeah, so self-regulation, okay? So we need to self-regulate, okay? Going into the day knowing that I have parameters. I have $10. If I lose it, I'm done. Or you can do whatever you want. You can say, well, if I have 5 losers in a row, I'm done, right? Whatever you want to do. It's all how you want to set your plan up, okay? But self-regulation, okay? So we want to watch, wait, observe the big facts, the evidence, especially on the higher time frames. You know, the bigger the time frame, higher time frame, the bigger the facts. Patterns, candlesticks, order blocks, trend lines, key levels, all that stuff, okay? Screw indicators. Okay, let me just say that, point blank. Indicators, schmindicators, okay? I think more people lose money based on indicators. It's just you know, it's just like, what it is it's like chasing a phantom or a fantasy of that, oh, this is going to be this is the key right here, this is the holy grail, this is really what's going to make the difference, is this indicator, right? You know what? The price action of the market, how long were candlesticks around before? I don't even know, but it's been thousands of years, right? I'm pretty sure. So candlesticks, that's, I think, really the meat and potatoes, right? And price action and that. But, you know, and some, now, I don't know that the day will ever come, and let me just be full with you. I do use volume, okay? I do use stochastic oscillators, but here's the key. Using them responsibly. Because nothing I say is going to get you to stop using indicators if you want to use indicators, right? Even myself, no matter what I say to myself or whatever, no matter how much money they cause me to lose, I'm probably never going to stop using volume because it's very useful. That actually is one of the more useful ones that I like. But I'm never going to stop using stochastic oscillators, you know, because it's just like who I am. You know, I'm a stochastic oscillator, you know. But yeah, that's how attached to it I am. You know, and I also use on balance volume. So I have 2 bars. Down here I have regular volume and on balance volume with a little, you know, one of those lines like that. And then the other one is stochastic oscillator with RSI. So those are my 4 that I use, and those are pretty much non-negotiable. Those are just, but beyond that, I have moving averages, and then that's it, right? Isn't there there's a movie with that white guy? What's his name? I know I'm a white guy too, but this guy's really white. I know I'm pretty white too, but Steve Martin, right? And he's in that movie, and I think it's called The Jerk, right? And there's a funny part in that movie where he's like, he's lost everything or whatever. I don't know. I haven't really, honestly, I don't think I've seen the movie, but I've just seen like bits and pieces of it or whatever. Like this, it's kind of a meme, it's kind of famous on the internet or whatever. But he says, all I need is this pencil, you know, because I guess he's lost everything or whatever. He says, and this piece of paper. All I need is this pencil and this piece of paper, and that's it. And my umbrella. Okay, all I need is this pen, this piece of paper, or pencil, and this umbrella. And, you know, you get the idea. And I need this, and I need that. So, anyway, but yeah, so watch, wait, look at the big facts, all that. Okay, reduce the number of trades while increasing the quality, right? And what I mean by quality, this video is almost over here, but by quality, I just mean, obviously, risk to reward. Okay. you know, this is, I do need to work on my organizational, because, you know, the more organized your brain is, right, the better. So that means risk to rewards, or risk to reward, and just the yeah, risk to reward, and but also, I guess you can make an equation. Probably can't write good. Probability. Hope you can read that. Probability, right? So, what I mean by increase the quality, we're decreasing the number of trades. We're reducing the number of trades, but we're increasing the quality. What do I mean by that? Well, we're looking for better risk to reward ratios. We are looking for higher probability trades, right? Higher probability trades. Okay. It went from messy to messier. Higher probability trades, okay? So a better risk to reward ratio, lower risk, higher rewards, and a higher probability right? And so that has to do with sticking to your higher time frames primarily. And this is why it's good to have multiple things to trade, multiple currency pairs, multiple different other things. If you want to trade like metals or oil or indices or whatever your things are, you need to have options, right? So that you're not feeling desperate to get in on a trade on your one pair. If you have one currency pair, you know, it can be a tendency to say, man, I just, you know, yeah, obviously you can wait for the good trade, the best trade, the big trade, right? This money shot right here, this slam dunk, this grand slam trade, right? But obviously, if you have multiple things tradable, in other words, if you have multiple charts of different things you can trade, right, then you have multiple things that are going to hit at different times, right? So in a 24-hour period, or let's say a period of 1 week, right, every pair is going to have that one huge move. And a lot of times, once a day, a pair will have a big move, right? And so you can identify those times for those different pairs, like with GBP USD, it's 3 a.m. You know, that's usually you'll get a big move right around 3 a.m., you know, 2 to 3, but 3 is like the average. And then also like 10 a.m. is kind of the average for that big move. It kind of starts at 8. So I would be on the charts, looking at the charts no later than 2 a.m. Eastern Standard Time, Eastern U.S. Eastern Standard Time, no later than 2 a.m. and then it should start taking off 2 or 3 a.m. and then it kind of fizzles out whenever, I don't know, 5 or 6 a.m. or something like that. And then it starts back at around 8 a.m. and then a lot of times you'll have a heaviest volume will be around 10 a.m. or something like that, depending, right? But because a lot of times you get news at 8:30 and then sometimes you'll get news at 10:30 or something like that. But you know, and all that. So learning. So basically, if you know, you need to learn one pair at a time, right? And get that nailed down, get that figured out, and then you now you know that pair. You can go to another one, right? And you can say, okay, well, when is the best time for this one, right? And whatever, you know, you set your setups and you wait, right? And you can have alerts like on TradingView and that. But anyways, so yeah, so there you go. So then observing and controlling your mind, master your mind control, right? And so this is a huge one right here. I'm going to circle it in green. Observe your mind, right? You cannot control your mind until you know what it's doing, okay? So In other words, when I see the market doing this, right? I gotta know, okay, brain, no, bad brain. Don't place the trade right now, right? Because impulsive traders typically lose money. You just click in the buy and sell button. You just click and click, 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 click. How fast can you move your finger? How fast can you move it? How fast? So what you need to do is just chill and just sit back and just, you know, you need to be like the tiger or the panther or whatever, and sort of stalk and look and wait and listen and observe and wait for your chance, and then boom, you go in, right? But you have to know, okay, brain, I know when I see those charts moving, okay, I'm like, oh man, I don't want to miss out, you know, and so I gotta say, hold on, wait, brain, okay, no, okay, so you're aware, you're observing, then you become aware, and then you can control, and you can say no. You see, you have to. This has to be more powerful than this, because I use my right hand for the mouse. Okay, so I need to first observe, and then be aware, and then control my brain, because my brain is one that tells my finger to click buy and sell, and lose money, or make money. But what I need to do is let the chart tell me when to buy and sell, okay? Not my eagerness. And I talk about this in a lot of my other videos. And I need to be controlled by the evidence and the facts and all these, okay? And the fact that I'm looking for a high risk to reward and a high probability trade, and I'm reducing the number of trades, and I'm increasing the quality. I need to let that control my trades instead of my emotions, my eagerness, my fear of missing out. Okay, I think that is I would say the hardest part about trading is controlling the mind, right? Mind control. Okay, but we got to master our mind. So if you can master your mind, I mean, you're only limited by what is like actually physically possible, right? You know what I mean? Like, if you can master your mind, it's like that's the ultimate. It's the ultimate. Okay, but to do that, we have to be aware. We have to observe. We have to learn about ourselves, not just what a book says or what a YouTube video says or what the charts say, but we have to learn ourselves. We have to study ourselves. I'll say that again. We have to study ourselves and learn ourselves, right? And be aware of who we are, right? So I'm eager to make money. I really want to make money really bad, and that is a major weakness, right? So identifying strengths and weaknesses, and it's just like if you go into a battle in war, and you're weak in all these areas and stuff like that, and you just go rush into battle, and you haven't studied yourself. Sun Tzu, the guy who wrote, the man who wrote Art of War, you know, he said, you know, if you know yourself and you know your enemy, which is the market, I guess, but if you know yourself and your enemy, then in 100 battles you will not be in peril. I'll say that again. If you know yourself and you know your enemy, in 100 battles you will not be in peril. So, knowing yourself and how you react, and you know what? And before you even turn on a computer, before you even start it up, you know, you can have a checklist. You can have it written down. You can have it on sticky notes in front of you. You know, but just before you even look at a chart, before you look on your phone in the morning when you wake up, you know, and all that, just talk to yourself. You know, go stand in front of the mirror, whatever you got to do, but just be like self, brain. I know when you see the charts, you're going to get eager. You're going to want to place a trade. You're going to want to make money. You're a little greedy bastard, and I don't like you because you lose me money because you're too greedy. You're too eager, you know, and you're going to do what I say. Okay? So then our minds are subject to our spirit, right? We have a spirit and a soul, and then we have the flesh, right? We must master our flesh with our spirit and our soul, okay? So there's a whole big thing here going on where it's basically like, okay, well, I know that my flesh has this tendency, but by the power of my spirit, and even God with his help, the power of the Holy Spirit, I'm going to bring my mind and my flesh under subjection, and I'm going to tell it what to do. It is not going to tell me what to do. Because when I die, my spirit, my soul will leave this flesh and continue to live forever in heaven with Jesus Christ of Nazareth. And so why should I live according to the flesh, or be subject unto the flesh in any way, right? My spirit, my soul should control my mind and my body, right? And so what I can do is I can say, you know what? You're going to do what I say when I say to do it, and you're not going to ask any questions, because who is it really talking? It's really my soul. It's really my spirit. So I can say, you will not place an impulsive trade. Okay? You will watch and wait and observe the facts, the evidence, all these things. You will reduce the number of trades. You will increase the quality, the risk reward, the higher probability, the probability. You will, and then you're basically doing this right here. You're self-regulating also. So you're saying, all right, before I even turn on the computer, before I even turn on the phone, okay, I'm aware of my tendencies, okay, which is to lose money. Why? Because I act like an idiot. Okay, why? Well, like I said, it's got to do with different things. Revenge trading, FOMO, just like not having the ability just to walk away, to accept, right? Acceptance. There was a guy, I used to go to, I've been sober now for 11 years. When I went to Alcoholics Anonymous a lot, there was a famous, locally famous guy in there who passed on since then. I think I'm not sure if I think he might have been saved. Anyway, but he used to say, acceptance is the key to my abundant living. Or maybe that's the big book of Alcoholics Anonymous anyway. I think that's actually in the big book of Alcoholics Anonymous, right? Which I believe was divinely inspired, even though it doesn't say Jesus anywhere in there. But so anyway, acceptance is, I think God just got tired of seeing alcoholics not have any chance, because at least if you get sober, then you can live, you can find Jesus and live a decent life. Not that gets you into heaven, because Ephesians 2:8-9 says, "For by grace are you saved through faith, and not of yourselves, is the gift of God, not of works, lest anyone should boast." And then in Jonah 3:10, the Bible says, "For God saw their works, that they turned from their evil ways, and He repented of the evil that He thought He would do unto them." And so we see that we're saved by grace through faith, not of turning from your evil ways, right? And so anyway, but yeah. So what was I saying? So acceptance, right? Accepting. Oh, I lost $10. Oh, I really want to make it back. Oh, I lost $5. Oh, I really want to make it back. Let me double down. Let me, revenge trade. Now, let me say this. Okay. So if you have $10 to lose, okay. So let's say you lose $5 on your first trade. Whatever happened. Okay. Let's say you double down on the next trade. That means you have less movement for that trade to go bad, and then you got to cut it, and then you're done for the day. Now, if you lost $2.50 and whatever happened, I don't know how long the move was or whatever. If you want, let's say you lost $2.50, you have $7.50 left for the day, okay, on your $100 account. Well, you can double down in revenge trade right there, but as soon as you get to your limit, you're done, right? So you have to think, well, golly, I want to stick around until I get it right, right? So, you know, but here's the thing, when you do get it right, boom, you know, then you got other concerns, right? How long am I going to let it run? When am I going to take profits? You know, and you have good concerns, right? And then that I've talked about in other videos where you need to take profits and you need to learn, figure out, you know, they say before you place a trade, you should know where your stop loss is going to be and where your take profit is going to be, right? And or at least have some idea. You know, you need to have these. Maybe, you know, obviously it's like this kind of things that these rules are subject to the evidence and the big facts. In other words, this stuff, you know, in other words, what the chart is doing that day, right? So you're saying, okay, my stop loss is here, my take profit's here, boom. Okay, now you know what the risk is, all right? So I'm risking $2.50 to try to get $5. And so that way in your head, you're not just thinking, well, you know, it could keep going. I could get $10, you know, and if you want to do a run in profits, trail and stop it, then do that. Run in profit, trail and stop it means that as it's going, the profits are running, and you're just moving your stop loss, moving your stop loss, moving your stop loss up. Now, that's the thing, comes with discipline you need to have in order not to just completely, you know, change your mind and say, I think it's going to turn around, and so I'm going to move my stop loss, and then it keeps going, but I think it's going to turn around and move my stop loss, and I think it's going to keep turning around, and then it doesn't turn around, and then you end up with nothing or less than nothing or whatever. I mean, I can't tell you how many accounts I blew by not having a stop loss, okay? And I observe someone who has a lot of money and is very profitable, and that's what they do. So they let their profits, they let their winners run, and they stop their losers very quickly. And how they do that is by using stop losses religiously. Anyway, so that I'm just going to leave it there. But yeah, so number one, observe and control your mind, master your mind control. Also got to do with self-regulation. Okay. Number two would be watch and wait. Look at the big facts, the evidence. The higher the time frame, the bigger the facts. And then, you know, basically the big facts and the evidence is patterns, candlesticks, order blocks, trend lines, and key levels. Okay, so watch and wait. Watch the big facts. Wait and watch the big facts of the evidence. Okay, reduce the number of trades. Number three, reduce the number of trades while increasing the quality. Okay, which is looking for a better risk to reward and a higher probability trade. So how are you going to act? How are you going to act when the market starts doing what it does, right? Or if you're in a consolidation, just don't trade a consolidation unless you have a direction, unless you pick a direction, and then if you're wrong, well, cut your losses quick, get in on the right side, let your winners run, but try to pick a good entry, you know. So, and that's a whole subject for a whole nother video, you know, because when it's consolidating and you think it's going to go down, so you sell here, but then it goes up, well, now you stop loss here, but then you're taking sort of a late entry, right? Instead of getting in down here, now you're taking that. So you have to live with that, and sometimes, you know, if it's breaking out, it's breaking out, and so you can kind of get away with that, but you have to take profits before it pulls back, because you're not going to be able to survive that pullback because you got in too high for the buy, right? So anyways, hopefully that makes sense. If not, just whatever, you know, replay it, watch it again, rewind it, do what you got to do, you know. But anyways, this is Blake with 10 Talents Trading. I'm also known as Forex Money Flipper, and here's the hat right there. So yeah, that's all I got to say about that. Hopefully you liked the video and you found value in it, and I appreciate you. Thanks for watching. Hopefully this helps me and y'all. Here's a close-up of the board if you want to screenshot that. I know it's messy, but anyways, yeah, so I appreciate y'all. And let me get a little thing before I can do my thumbnail. I gotta back it up. This takes a lot of practice, doesn't it? Like, whatever. I don't know. I look pretty stupid, don't I? Anyways, there you go. It is what it is. All right. Thanks for watching.